Hey guys, this is George David with George David Investing. In today's video, we're going to be talking about Advanced Micro Devices, AMD stock, and talking about two very interesting things. Number one, why the crash is coming for the stock, but also some upside in the short term before some of that contrarian negative momentum is going to be affecting the stock. So as always, we're also going to break down today's stock market news and analyze how some of those factors that are coming into the market over the next 6-12 months are going to directly contribute over to those kind of factors that we're talking about on a negative front for AMD stocks. So without further ado, let's dive right in. All right, so in this video, we're going to cover number one, AMD Advanced Micro Devices stock analysis, and understand why a crash is likely coming for the stock. We're also going to be talking about why there's a potential upside in the short term as well. So those are two very interesting things. Number two, we're also going to be talking about today's stock market news and how some events that are happening right now are setting up the catalyst 6, 12, 24 months down the road, which will tangibly impact advanced micro devices, and also it will give you a very interesting perspective on the direction of the stock market and your investments going into the future. And number three, we're also going to be covering, is it time to buy, sell, or wait, both from a short-term and a long-term investment standpoint. And finally, we're going to round this all out and always talk about triggers for a stock market crash, so you know when that next crash is coming, so you can be defensive at the right times, and most importantly, offensive when those golden opportunities, whether it's a correction or a crash, happens, so you cash in at the best, most optimal time frame. All right, so let's dive right into AMD. So currently, AMD runs approximately a run rate of about $11 billion a year in revenue. The maximum revenue potential at the moment, with all the opportunities that are coming in with AMD in the future, is about $30 billion a year. Now, there is some potential that they can exceed that number and go towards $50 billion, but we're starting to talk about technologies that aren't currently part of the infrastructure that AMD has, and that's why we're going to use this as a more conservative and realistic estimation that within the next 10 years or so, $30 billion in revenue is what AMD should realistically grow to. Now, this gives us a company growth potential of approximately 172%. Now, this means that I give, and there's other very important factors we're going to be talking about later on in the video, especially in terms of what's going on in the market today, so we understand why AMD is just an okay in terms of an investment play for the long term. A little bit better if you're a short-term investor right now, trying to squeak out a couple of percentage points, okay? So the stock gets an okay because number one, which I'll be touching upon shortly, there's a lot of variability in revenue. There's a lot of variability in the company's operational growth potentials, and it's definitely going to be slammed by some of those taxation factors we're going to be talking about shortly. So you have companies, number one, that have more stable revenue growth, have consistent positive revenue growth, and also greater revenue growth than AMD stock. So with all of those things in mind, that's why AMD really doesn't stack up against it. And this is before we even talk about some of the different factors that are going to be affecting AMD and why the stock is poised to have a strong correction alongside when the market hits a strong correction as well. Another very important factor is whether AMD stock is a mass use stock. Well, basically any kind of AMD component is something that you interact with on a day-to-day basis. It might not be point of face, such as a Tesla or a Microsoft with Excel and a whole suite of different products, but it is something that a lot of people interact with on a daily basis, and that's why we give this a mass use stock categorization. Now, moving ahead, as always, if you like this material really quickly, go ahead and smash that like button. Helps grow the channel, also helps push this video as well, and I'd really appreciate it. And if you haven't done so already, go ahead and hit the subscribe button to not miss any new information that I bring out. I always bring it for free and try to post as often as possible, going back on a daily schedule. Now, moving ahead, let's talk about today's stock market news. And we want to understand what's going on right now, which is laying the ground for what's happening in the next 6, 12, 24 months, to understand why AMD is not a good long-term investment, and also why the stock is poised to be really slammed with the upcoming correction that's going to happen. So number one of the three big stories going on right now is that, number one, capital gains tax rates are proposed to go up over 50% at the highest levels for the high income individuals in a bunch of states. We're talking about like California and New York. That leads into some considerations. We'll touch upon that shortly. Number two, the corporate tax rate increases. Just like I mentioned in previous videos, this is going to really affect earnings, and Advanced Micro Devices is exactly one of those companies that are very sensitive to those kind of increases. And number three, we still have the whole Russia sanctions and Russia retaliation. A lot of people don't realize this, but as we talk about in triggers for a stock market crash, which coincides with triggers for an economic recession, oil is pretty consistently by far one of the largest and most consistent catalysts for those economic contractions. So as much as it's not in the news, as much as some other things are happening, even Aaron Rodgers leaving the Packers, who would have known about that? The Russia sanctions really is something that Ray Dalio likes to talk about as a second, third, fourth order consequence that maybe people are overlooking, but poses a very big threat. So moving ahead, is it time to buy, sell, or wait with AMD to invest? In the long term, if you want to go into AMD, I personally wouldn't, because there's a lot of variability. Like I said, there's companies out there with more consistent revenue growth that is greater in the aggregate, which is the average, than AMD, and also has larger growth potential as well. We have a multiplier of 172. There's other companies out there with more consistent revenue growth throughout history and has larger growth potentials over 500, 600, 700%. Now, in short term, AMD was slammed a little bit, and they had a good earnings report, so there is some contrarian movement. You can definitely cash in, especially the market right now is going through a little bit of a dip. Fundamentals are sound at the present moment. Taxes have not been priced in yet, and it hasn't yet been deliberated. So we're not at a moment yet where things need to be worried about. So there is definitely some 5, 10, 15% upside. Depends on what you're comfortable with getting in terms of a short-term play over the next couple of weeks with AMD. You get the green light for the short term. The long term, absolutely not. And as I always talk about in my videos, and it'll always sound boring, but it's just super, super important, this channel is not about trying to be all hypey. It's about giving hard facts and trying to make you guys the most amount of money with the most upside while also minimizing risk. And you do this by avoiding, which I'll show you in the next slide, investing long-term at an artificial dip. Now, if you invested in an artificial dip in the short term, yeah, maybe you can squeak out like a couple percentage points. But if you're trying to buy in for the long term, you bought in, as I always mention, and that dip, and you got a little bit hesitant, you saw the market sliding, you would have lost 20%. Had you bought at the right golden cross point, which is when the long-term average finally dips below the short-term average, because the short-term average hits a positive momentum, then you would have made a nice 30, 40%. This is during that very volatile tech bubble, kind of reminiscent to a little bit of what we're happening right now with valuations, especially in the tech sector after the COVID crash and requisite stimulus packages that came in with that Robinhood money. So you would have made a nice 30, 40% over about a 1.5-year time frame, totally taking advantage, maybe not 100% of the whole bubble, but no one's complaining with that kind of upside while limiting downside risk. That's what I'm trying to get you guys to do here. Now, moving ahead, let's talk about this. Triggers for a stock market crash. The big ones in history, number one, spiking oil prices. I have a proprietary algorithm that has tracked and was able to even accurately predict the top of the tech bubble as well. In short, it's basically saying that when oil prices go 50% above the average 2-year price point, well, that starts putting inflationary pressures both on consumers and on producers of businesses, both in terms of transportation and cost. That starts to constrict spending at a rate faster than what consumers can adjust to and producers and businesses can push on to consumers, and that starts causing a spending issue, spending being the driving force of economic growth. Also, another factor, spiking unemployment rate. When unemployment rates go above 0.6%, above the economic cycle's minimum floor, and this could be due to multitudes of different factors, then that's also another trigger for an economic contraction. This basically sets a sequence of events in motion that starts contracting spending, because now it's affecting all different parts of the economy as well. And spiking interest rates, that's more so in the past, back in the 70s and 80s, when there was runaway inflation. We're not there yet, but if you have spiking interest rates over, let's say, 6 absolute percentage points, so we're not talking about 6% change, we're talking about a numeric number here, then those are things that could trigger the stock market crash. And obviously another wildcard trigger, if there's some form of hybrid variant of COVID or another pandemic that comes and starts causing economic lockdowns, and there you go, that's another factor that can trigger a stock market crash, just like we had with the COVID. And then you need another round of stimulus to basically bridge that gap and get the credit cycle going. So again, right now, we do not have spiking oil prices to the point that can trigger it. We're not there yet. The market is being able to absorb this increase in prices that we've seen because it is pretty similar to the oil prices that we had in 2019. Spiking unemployment rates, we're not there. We're continuing to go down. And spiking interest rates were good. But going back, we can see, which I'll talk about in the next slide, and this is the final slide for you guys, capital gains tax rates. Let's break this down, the news factors that are very important, not only to understanding what's coming into the market 6, 12, 24 months from now, but also understanding how AMD stock plays into it and what's going on with some of the bubbles that we're seeing in both the tech market and the stock market and the housing market as well. So, capital gains tax rates. Sounds ominous, greater than 50% for the highest rates in many states. That's not that big of an issue, actually, because the increased taxes on the rich, which is a small fragment of the amount of earners out there, although they do make a lot of money, will be offset by more disposable income in the middle class. This is good because some of the social programs they have and some of the tax cuts they have in the middle class will help give more disposable income. That will percolate back to the economy. So think about this as kind of a Libra balance scale. Yes, the rich are getting slammed more with taxes, but capital gains, not all of that income is being used. This is mostly investment income. Only 25% of it is going to be taxed. A lot of it is sheltered, 75%, in different kind of vehicles like IRAs and stuff like that. So the increased taxes on the rich, again, will be offset by more economic disposable income in the middle class. So we're good there with tax rates. This is actually a little bit different than what a lot of people are concerned about. The two things we got to be more concerned about in terms of the economy and implications and ramifications for the stock market. Number one, Russia's sanctions. Again, although we don't do a lot of business directly with Russia, it becomes tangible if Russia starts cutting oil supply to some of our large trade partners we do business with, especially those large tech companies like an AMD, like an Apple that do a lot of business with Europe. If oil prices start spiking out there, then that's less spending that's coming into those companies. That's going to directly impact earnings there. Finally, corporate tax rate increases. Once those become implemented, this will cause a stock market correction. It will not cause a crash because ultimately this will impact earnings by lowering earnings because there's more money that's being allocated to taxes. But at the same time, the market will rebound because it's going to correct. It's going to adjust for those changes in earnings, and it won't impact GDP because, first of all, this is not a large corporate tax rate hike. And finally, number two, this doesn't change the fact that employers can hire people. Essentially, it's an accounting system where, yes, you can hire people and it'll lower your total taxable income. And then finally, that portion of taxable income that's still remaining, that's what's going to be impacted on the earnings, and the market's going to have to adjust with that. And that's why AMD, when we're taking a look at it, is going to be impacted pretty significantly, because the stock is very sensitive to those kind of changes. We've seen it through history. We've seen the stock rise 3,000% almost from 2016 till now, just because of these ebbs and flows in different demands and economic sensitivities. All right, guys, so that wraps up this video. Stay tuned if you haven't already. Smash the like button, subscribe, and I'll have another video coming up shortly as well. All right.